Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. It is Friday, TGIF, 10/28/2022. We got mixed futures this morning. Got the Dow up a little bit, Nasdaq of course down, Amazon doing like Google and Microsoft and everybody else just kind of soiling themselves in the pre-market. Those are a no touch. PCE coming in at 6.2 versus 6.3 expected year on year. The core 50 bips on a month over month in line. Year over year 5.1 versus 5.2, so not totally unfriendly. In line is slightly better than expected, but nonetheless still too elevated, right? Still too high. I don't see the Fed going overly pivoty on those numbers. So the good news, there was some good news in terms of wages this morning. Salary increases starting to tame a little bit. Unfortunately, personal savings rates are back at record lows. So that's not great for discretionary spending. Plus, you think about where housing is going to have to go. The consumer is not in a strong position. Obviously, the top 5% will do what they do, but other than that, not great. So we had a small cap. I talked about that as a way to play the bear market rally. We bought the IWM to play the bounce. It worked. We stepped away yesterday. I know all the seasonals say the rally should continue from here. Coming up on November, we got midterms. All the talking heads talking about a red wave. That would be positive for the market. You got a Fed decision next week. They may talk about the prospects for slower hikes, starting with the December's decision. Who knows? That's kind of what we're thinking happens. Taking a page off the Canada book. Who knows? But the market here still not. I mean, even with this, somewhat unfriendly data, the market's not giving it up here. Russell is bid pre-market a little bit. There is an old saying out there that I think the late great Tobias Levkovich. I don't know if he coined it, but I thought it was awesome. Said you want to be cautious when you're picking up nickels in front of a steamroller. In other words, playing the bear market rally, you still got an overarching theme of a bear market intact. That steamroller is coming, so if you stay too long, you're going to get flattened. So in an effort to not stay too long, we got rid of that IWM position yesterday. I'd see myself raising cash over the near term. The rally wants to still go a little bit. That's great. We're going to sell into it. And we're going to gradually increase our inverse ETF weightings, probably on the S&P. We'll probably buy the SH. That's just a one-time inverse. But that's probably going to be our play. You've got the dollar as measured by UUP. Looking to recapture its 50-day moving average to the upside. That's not a positive. S&P failed again at the 50-day. If that thing, if this thing charges up through the 50 and it looks like we actually have a shot to the 200, I'm all for it. That's fine. I've got plenty of stocks that will do great. But at the same time, it just, what I'm seeing out there, and these large companies and the earnings are just so terrible, and just shows you how much further I think numbers have to come down for 23. The earnings bear market. That has arrived. So the near-term rally is great, but the earnings bear market has arrived. So just be ever present, I think, in my opinion. So yeah, with the dollar, I don't see another sovereign stepping up to knock down King Dollar. Do you? Europe? No. The euro? No. Like who's gonna out hawk the Fed? Nobody. So I don't see the winners changing yet out there. Pharma, energy, agriculture, select engineering, and construction. I don't think it makes any sense to buy those mega cap techs on the dip yet. ExxonMobil, look at the trend. ExxonMobil this morning, good quarter, stocks up. Vertex Pharma, it's been a great stock, good quarter, stocks up. These trends will continue. I don't see a change. So that is it. I'm not trying to bum you out, but be smart. And you never get broke taking a profit. Remember that one. Talk to you on Monday.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.